Hi, everyone. Wednesday, March 22nd. Welcome to Three Things with Spyglass Lending, where we delve a little bit deeper into the real estate and lending related industries. Now, usually I do these videos on a Friday, right? But I wanted to do it today, specifically on a Wednesday, because I came across something so interesting and I didn't want to wait a couple of days. I wanted to share it right now. And I want to start with this. Most of the time when I'm getting on here, I feel like, especially in the last few months, I am professing the same doom and gloom you might otherwise see out there in the headlines, right? The interest rate has nearly doubled. It's a problem for the market, the supply and demand chain, whatever it may be. The recession is coming. I feel like I'm banging this drum maybe a little too often, like everybody else out there. Well, I found somebody who has the complete opposite theory, right? They are all rosy, all optimism right now. And that's really interesting. And his name is Dr. Christopher Thornberg. Now, I should also say this. I have no affiliation with this man whatsoever, never met him. However, he is somebody I greatly admire. His name is Bruce Norris. You may or may not have heard of him, but he is a guru real estate investor, especially in Southern California for the last few decades. He has since left. He has moved to Florida. He's completely out of California, but man, did he do well for a number of decades here in this state. He was somebody that I followed greatly, and he has listened for a very long time. He's listened for a very long time to Dr. Christopher Thornberg. And I should also say this about him. If you go back all the way to 2006, Dr. Thornberg had predicted, he's one of the few people on record who absolutely predicted the subprime mortgage crisis. And at the time, they called him Dr. Doom. And since then, they call this guy Dr. Sunshine because he's been anything but doom. In fact, for a very long time, he's been extremely optimistic about the American economy. And now it feels like he's even more optimistic than ever, which is like, again, the complete opposite of what everybody's saying. And you know, this is over an hour. His presentation here, this economic forecast that he gives, is over an hour. He's talking to this individual from New Vision Credit Union. You can find this on YouTube. I didn't put up the link here because it's too hard to just take down what I would put up. It's easy enough to just go on YouTube and put in Dr. Christopher Thornberg. Again, this was put up just about 10 or 11 days ago. And one of the big things that he really talks about, and I want to pull out just a couple of things specifically from the presentation. One of the big things is here. He's saying, hey, of all the indicators that are out there that really want to grab our attention about a recession or what's coming, the number one indicator that everybody should be looking at is what's going on with the consumer. Everything else will really potentially lead you down the wrong path. And these two charts really do tell an interesting tale. I pulled these out specifically from his presentation. And number one is you can see on the left-hand side the gas prices versus VMD. That's vehicle miles driven. Well, the gas prices are this crazy squiggly blue line that are all up and down all over the place, but unfortunately, certainly more up than down as of late. So gas prices are still quite high. And the vehicle miles driven, other than the very beginning of the pandemic, maybe the first part of the pandemic, you can really see they have tapered off. They have leveled off comparatively to pre-pandemic levels. That is interesting. So here we are with a doubling of gas prices, and everybody's like, hey, when that happens, forget it. People aren't going nearly as many places, whether that's work or for leisure. And the reality is that's just not true. People are absolutely out there. So this hasn't had this major effect. Just like, you know, food prices, which saw a huge run up in inflation. That's, you know, eggs, milk, cheese, bread, whatever you want to call it. You're still not seeing a huge precipitous decline in people going out there and spending. And food is absolutely a necessity. Driving, a lot of it for leisure, is not. So this is an interesting chart, as is the one on the right, specifically car price inflation, and that's YOY, or year over year. And what this is showing is that the demand is absolutely still there for vehicles. People want to be spending. Consumers want to be spending their money on vehicles. They did so on used cars, specifically through the pandemic, which is that massive blue line spike, because new cars just simply weren't available. Now they've become a bit more available, though they're still woefully deficient in what new cars are available compared to what it was so many years ago. So that's tapered off with the used car. You know what the inflation price for used cars are. But again, this is still showing that the demand is there. And these are some very interesting charts to me, and why and I'm pulling them out specifically. And again, there are so many other things he goes into. You might want to watch this yourself, like I said. But here's the big one, right? We are a real estate related show or video segment. And everybody wants to know, is this guy predicting a collapse? And not only is he not predicting a market collapse, he doesn't think it's even remotely close, even if the interest rate continues to go up, which I will say that he thinks it will, and because he thinks there's not going to be a recession. So there doesn't need to be this huge precipitous decline again in the 30-year mortgage rate. Because what he's showing here, and this is really interesting as well, It's the debt. It's that kind of yellowish gold line that you want to pay attention to, because if you look at all the way back from 1995, right, all the way essentially to what was 2008, you saw a huge run up in debt. That's what we all took on in our houses. But if you're looking at it from 2008 all the way to 2020, you're not. And that's something that's important. You can kind of see the line has tapered off. In fact, it went lower for a little while before it came back up. That's big. Consumers are just not taking on the debt you think that they are, whereas the blue line is showing the gargantuan spike in equity. That's pretty impressive, and certainly something you want to be taking a look at. And then on the other side of the equation, this other chart, which is also pretty interesting, is what you're seeing is that the FICO score, which above 720, so really great creditworthy borrowers. Obviously, pre-recession with the subprime crisis, not nearly as many of where everybody taking on the debt was over 720, whereas it's more like 75 or even 85% for a period of time of those that are taking on the debt since that time. And again, that speaks to the credit worthiness and what the consumer is doing out there. These are, just these charts alone are extremely interesting. He plays a little fast and loose with some things that he says on here. I'm not going to tout everything that he says, but again, I was extremely impressed with this. I think everybody should take the time and watch it, because a lot of us out there are, really banging the drum of the doom and gloom or what's coming, or everybody's preparing for that, and he's preparing for the opposite. And if that's the case, and you want to follow what he's saying, you can make a very different future for yourself and what you're preparing for the next couple of years. Again, this has been 3 Things with Spyglass Lending. I appreciate you joining me. We'll do it all again next.